So how to find stocks with high implied volatility. I use a website called Market Chameleon. It's free. I think it has a paid version, but to get what I want, I don't have to pay anything. It's free. So to get or to find stocks that have high implied volatility, I'll go to options, implied volatility rankings. Now, I mentioned this in most of my videos, but I still get this question asked a lot in the comments and in emails. So I thought I would just do a video just for that, how to find high IV stocks. So let's start again from the beginning, Market Chameleon. So I go to options, click on implied volatility rankings. And then I personally like to choose over 10 billion. So to deal with stocks with a bit more stability. So I'll choose over 10 billion. And then over here, I'm going to choose IV rank over 70. So right away it gives me a table, and then I'm going to sort by IV rank. So you've got implied volatility over here, and then you've got IV rank. The difference is implied volatility is current implied volatility of the stock, but IV rank is basically comparing implied volatility, current implied volatility, comparing it to the past 52 weeks. So it tells you if this current implied volatility is considered high for this particular stock. So right now, ZS Scalar has an implied volatility of 97.3, but its IV rank is 100%. So in the past 52 weeks, this has been the highest it's ever been in terms of implied volatility. So this means that would be a good time to sell premiums against. Now the reason it's high is because it's got earnings September 9th after market close. So a good trade I plan on making next week is to sell a put credit spread on it at expected move. And as you see, since the market is crashing or tanking, a lot of stocks are going to have high IV. Look at this, from 100 to 91%. All names that we know: Peloton, Chewy, Adobe, Tesla, Coupa Software. Some of them have earnings. So if it has earnings, it'll tell you here. And some of them, DocuSign just finished earnings, just released their earnings, and it still has high IV of 96%, high IVR 96%. But you could see that the implied volatility dropped by 28% on DocuSign from yesterday to today because earnings was released. So implied volatility dropped. So this was probably a little bit higher yesterday, but today it dropped 28%. Yet, compared to the last 52 weeks, DocuSign still has high IV. You've got Apple. It's got implied volatility of 60.7%, but compared to the past 52 weeks, it's still at a high of 96%. So ideally, you want to sell, if you want to sell premiums, you want to sell it on high IV stocks because premiums will be overpriced. It allows you to go further out of the money, so making the trade safer. And eventually, if IV drops again, your premiums will drop really quickly, and then you can close the trade quickly. So that's why I like to sell premiums before earnings, because usually after earnings, IV will drop, and then you can close the trade quickly, even if you're on the wrong side of the trade. For example, I had a put spread on DocuSign yesterday. So I opened a put spread yesterday on DocuSign at a 200-195 strike, and it announced earnings yesterday after market hours, and the stock was trading, I believe, at around 220 at the open, and I was able to close it for 14 cents. So I opened for 81 cents, closed for 14 cents, even though the stock dropped a little bit after earnings, but because of the volatility crush, I was able to close it for much, much less. So yeah, so I opened the trade yesterday when DocuSign was trading at around 236, I believe, and it opened today at 233. So almost the same price, and I was still able to close the trade, and that's because of volatility crush. And of course, it does help that expiry was today, which is a Friday, so there was big time decay. Nvidia would be a good stock to sell premiums on. Now, the problem is, what do you sell right now when the market is all over the place? So one thing what I like to do is I always like to go against the trend. So if it dropped, then what I like to say is that it's not going to drop again. So I'll sell a put spread. But at the same time, you don't know if it's going to continue lower. You don't know when it's going to stop dropping. So I could sell a put spread now, and then it just keeps dropping again. And then all my put spread get tested, and then it's like I'm compounding losses. I could sell call spreads on the other side, but what if it just rebounds? What if we just had 2 bad days, and then everything comes back to where we were before, and it comes back fast like it normally does? So then my call spreads get tested. So I'm not sure which side to take, but definitely if you want to sell premiums, you want to sell them on stocks with high IVR. Something I'm definitely going to do next week is I'm going to play earnings on all the stocks that have earnings. So you could see here, Zscaler, Peloton, Chewy. You've got Coupa Software. You've got Work, Lululemon. Not sure how I'm going to play them though, but most likely it's going to be a put credit spread out of the money. And then I'm going to maybe sell a naked call if it's possible. If the premiums allow me to go very far on the call side, then I'll do it. Although Zoom scared me a little bit from naked calls. I mean, the stock was trading at 308, 310 before earnings, and then after earnings, it jumped all the way up to 469. So if I had a naked call, and I think I was gonna sell a 445 naked call, I would have been in big trouble with this trade. Now, of course, it dropped all the way down to 368 right now, but who knows if who's to say that this would happen every time? I think it was just a coincidence that the general market tanked, so that helped it drop. Sometimes naked calls can be a little bit dangerous, so I prefer put credit spreads, because the risk is defined. There is no max loss. I know how much I'm going to lose, and for some reason they seem to win more often with earnings. I think I had 4 put spreads this week on earnings, and they were all winners. Even if the stock dropped a little bit, I was still able to close it for a profit. Yeah, so this is what I choose. So this is what I use to find the stocks with high IV. There are other websites, but they don't give that much information or that much. Like some other websites will probably limit you to the first 30, and then I can go in to that stock and decide myself which strike I want to sell. Now, Questrade IQ Edge also allows you to look up so if you want to use Questrade to look up high IV rank, you could only use IQ Edge, and you go under scanner. It isn't as nice as Market Chameleon, but if you go under screener, you can look at all optionables or all stocks or all ETFs. But I guess all optionables means stocks that have options, and then you could click on stocks, and you can rank by IV. And you've got IV rank 52 weeks, but for some reason it's limited to these stocks. Let's try all stocks, and then let's show 200, apply, sort by IV rank 52. So it's giving me a triple leveraged ETF probably here. Let's see if we get the same results. It's giving me way too. See, I want to filter by market cap. I don't want to see the small market cap, but here you go. Here you have ZS Scaler that we saw before. We have Tesla. So it's giving ZS Scaler an IV rank of 56.8%. Tesla has an IV of 113%, but the IV rank is 63% because it already had a high of 163 and a low of 29%. So it's not giving me the same results as the other website. This website, for example, is giving me Tesla is giving me 97%. So let's go back and look at this column here. So under IV rank, IV30 rank, it says where the current IV30 ranks among the daily IV30 values for the past year. Example, if today's IV30 is higher than 80% of the observations within the past year, the IV30% rank would be 80%. This one here, IV30 52-week position, where the current IV30 sits relative to the 52-week high and 52-week low value for the symbol IV30. So for example, if the 52-week high is 30 and the 52-week low is 10 and the current IV30 is 20, this value would be 50% because it's sitting at 50% of the way from 10 to 30. Yeah, I'd rather use this column here, but I just want to compare it with Questrade. Why does it have a different amount? So ZS here has 100% one here, while Questrade for ZS Scaler gives me 56.81, and it's giving me an IV of 98. Let's see if that's the same. Yeah, so it's giving me the same IV, 98. Let's look at Tesla. 129% for Tesla, 113% for Tesla, so not exactly the same. Let's look at Peloton. It's giving me an IV of 129, and here Peloton is 132, so pretty close. So current IV is pretty accurate, pretty similar. IV rank here, this website gives me 100%. Let's go back to Questrade. Peloton gives me 73%. It had a 52-week high of 160. So I don't know how this website is calculating 100% IV within the past year. So it's also 52 weeks. So yeah, as you can see, there's a small discrepancy. I don't know which one's more accurate, but at least it gives you a good idea which stocks have high IV. You could use Questrade IQ Edge. If you don't have access to IQ Edge, then you could use this free website here. I usually use this free website. It's faster to access, and I think it's pretty accurate. It makes sense. And if you don't see a stock, you could always look it up here. For example, if I want to look up the SPY to see what's the IV rank on the SPY, you could see it's 75%, and implied volatility is 26%. So let's look up DocuSign. So DocuSign has an IV of 81. Let's look up Questrade. I guess I'll have to filter or sort by symbol. So DocuSign. Okay, it's not even there. It should be there. Okay, I saw AVGO. Let's look at Chewy. So they're giving Chewy a 107 IV, and the website is giving Chewy a 99. Okay, not bad. but an IVR of 99% as well. But Questrade is giving it an IVR of 86% because it once had 121% IV. If I click on filters here, I can basically add some filters to make sure I don't see things I don't want to see. For example, I don't want to see market cap below 10 billion. So let's see if there is a market cap I can add here. Add stock filter. Then I can click on add fundamental filter, market cap. I can go minimum 10 billion. Let's see what happens if I apply. All right, so now the list is a little bit cleaner. It's giving me the highest IV rank right now is Alibaba, while the Market Chameleon website is giving me an IV rank of 96% for Baba. It's up there, but it's not the highest. At least it's giving me an implied volatility of 51%. Let's see what Questrade is giving me. It is giving me 49, so pretty close. So implied volatility seems to be the same for both sites, but IV rank is just different for both sites. Apple is at 120. Apple is at 58% and IVR of 63. Definitely, I saw a higher IVR on the other website for Apple. So Apple has 60%, so pretty accurate, but 96% IV rank. Now so definitely this site might be wrong because definitely March had the highest IV. So there's no way that right now is considered the highest IV rank for Apple, because definitely everything in March had the highest IV, so it should not be 96%. And then Apple here says 63%, which is possible. It had an 84% highest implied volatility in the last 52 weeks was 84%, according to Questrade scanner. So you've got both choices. It's up to you to choose the one you want. At least with this one, it's quicker to get, and you could just simply filter on implied volatility. Still gives you which stocks have the highest implied volatility, but you want to make sure that compared to itself, it is considered high implied volatility. Just because it's got 100% does not mean that it's a good candidate, because it has to be compared to itself pretty high IV. And anyways, if I sell premiums on stocks with high IV, I don't just sell them blindly just because they're on this list. I sell them. I make sure that once I place my out of the money put spread, for example, that the premiums collected do make sense. For example, I like to go at a 20% probability of in the money as a short strike. So for example, let's look at Zscaler, for example. Now, the way I like to sell my put spreads or my out of the money put spread is I look at the straddle value first. I'm going to pick a September 11 expiry, so 1 week away. And the at the money straddle value is about 23, 24. So that's basically the expected move. So I'm going to take 135 minus 24. That'll be my short strike selection for my short put. So 135 minus 24 is about 121, is about 111. So what I'll do is, let's say I'll go to 110. And I'm only going to take the trade if I can collect at least 80 cents from the trade. Otherwise, I don't consider it to be an interesting trade. I don't think it's enough premiums. The only trade that I'll take less than 80 cents is the SPY. If I place a trade on SPY, which normally right now I'm getting about 60 cents for my SPY put spreads. See, so right now it's showing about 140 divided by 2, so it's showing me about 70 cents, but that's because I'm a little bit lower. If I go to 111, not sure if there's a 106. So for a 5-point wide spread, I forgot to mention, so I usually do 5-point wide spreads. For a 5-point wide spreads, I like to collect at least 80 cents, and that's how, from experience, that's how I realize if it has high IV or not. Sometimes these earning trades, at expected move, I'm able to collect $1 sometimes. When I choose a strike that's 20% out of the money, or has a 20% chance of being in the money at expiry. Or you can also say a 20 delta. Although I don't really trust the delta provided by Questrade. So you see, this one's giving me a 2 delta. I don't think this is a 2 delta. So I just like to look at expected move, remove that from the current market price, and that'll be my short put strike. Now, with all these stocks with having high IV, I'm really tempted to sell put spreads on all of them. But of course, if this market continues to drop, then all these will be tested and could become losers. So what I'm going to do instead is I'm going to hold on to it and just play earning trades by doing put spreads on them as well. At least I'm impacted by earnings reaction only. I'm not impacted by the general market for a whole week.